There are also participants overseas as well, so welcome. So let's get started. So brief intro. My name is Gary Ho. I am the Diversified Financial Analyst here at Desjardins Capital Markets. We're excited to have Powerband Solutions Executive Management Team here with us today for the next hour or so to highlight the announcement published last night, and I'll refer you to the press release from the company's website. I'm eager to hear the growth outlook for the year ahead and the expanding build out of the company's three key platforms, Drivers Financial, Drivers Exchange, and Drivers Lane, as well as how these pieces fit all together in the overall Powerband strategy. So today we have several key speakers. Obviously Kelly Jennings, Chairman and CEO, John Lamb, President and CEO of Drivers Financial, Sean Severin, CTO from Drivers Exchange, Bruce Pokes, Business Unit Leader at Drivers Lane, and Shabu Abraham, CFO. Justin Birch, who handles the capital market side of things, is also on the line with us. So we plan to have an interactive fireside chat. We'll begin by a short 20 to 30 minute presentation from management, followed by Q&A. I'll begin with a few questions myself and also open up to participants on the line. Should you have any questions, please use the raise your hand function. You'll see that in the top right of your screen. Time permitting, get to your questions one-on-one. Should we run past that 1 hour mark, please reach out to myself or Justin and we'll promise to get to your questions. With that, Kelly, the floor is yours.
Thank you, Gary. I should point out that Darren Swenson's also on the call. He oversees all the Drivers Exchange operations for us. I'd like to kind of start by just kind of giving a quick overview of the 2021 year. We rolled out the company during a difficult time with COVID. Then we entered into the shortage of inventory, which is the worst I've seen in my 27 years in the industry. And I think we've done a really great job. We put a lot of time and energy to get Drivers Financial on its firm footing for growth. And we've been able to put our resources behind Drivers Exchange and Drivers Lane to finally launch them in 2022. It's really critical from our perspective in terms of our overall business strategy is to have all three products function at the same time. The advantage we have with this product lineup is the fact that each individual division can generate revenue independently, but unified under one house. The system that we have, I think, is unique. I don't believe anybody currently has the solution where the consumer and the dealer can work together in concert. We eliminate middlemen. Drivers Exchange provides a system to allow the consumer to acquire and dispose of a vehicle. The Drivers Lane system is designed specifically more towards the dealer, but the information offering gives the consumer the opportunity to come into the system, do proper analysis, and make an intelligent decision. This is a huge purchase for most people, and what we're trying to do is make the acquisition of a car very simple, transparent, and we don't consider a dealer a middleman. We look at the dealer as a partner, and we're just trying to give the consumer a direct access to make smart decisions. 2022, the outlook is very bright for us. We're finally in a position to have these three components working in tandem for the year. We're expecting a very big growth year. A lot of initiatives coming forth. We have a lot of partnerships that we've acquired over the past year that'll come into play in 2022. I think that the nice thing for us in this whole year of the COVID and inventory shortages is it's allowed us to deal with adversity. And I think that's one of the things that we showed this year, that we were able to adapt and move forward. So we're looking forward to 2022. And I'll let John Lamb kind of provide you with a high-level overview of our Drivers Financial initiatives.
Great, thank you, Kelly. Yeah, Drivers Financial, we continue to experience exponential growth. We also kind of resonate Kelly's words where the inventory situation and inflationary pricing has been a challenge, especially in the end of Q3 and the first part of Q4. That being said, we had sequential double-digit growth. We are accelerating our dealer adoption rate. I mean, we're over 1,000 dealers on the platform now. That far exceeded our expectations. As we move forward into 2022 and we expand our offering, we'll start to see originations increase dramatically, right? So we continue to be a nascent player in a nascent space, but carve out our segment of the marketplace. And we feel that we're well positioned for the first part of Q1 when the market dynamics return to normal. And we'll have Jaron talk to you a little bit about Drivers Exchange that will be launching in Q1. And it's probably the largest effort that we have when we talk about engaging consumers and driving origination. So I'll let Darren pick it up from there.
Thanks, John. I appreciate that.
Darren, you're back on mute.
Am I good? Can you hear me now?
Yes, that's good.
Okay. Drivers Exchange is an agnostic platform for anyone to buy or sell a vehicle on either via auction, a static listing, or receive an instant offer. We know that the total addressable market within the United States in the automobile industry is a $1.2 trillion business. And of those transactions, we know that 50% of all of your used car transactions are held privately between the parties. Examples of that in the market platform servicing this today is Auto Trader, Craigslist. Unlike those that we mentioned, we give a complete solution to complete the entire transaction online in a safe and secure environment. Unlike Carvana, Drivers Exchange is an asset-light model, meaning we do not own the inventory. We simply facilitate the sale for our Drivers Exchange users. We did a beta test here in Northwest Arkansas in Q2 of this year, and prior to our launch in 2022, we've been focused on fine-tuning the user experience based on feedback from beta users in our focus groups. We've improved the platform to account for logistics, customer pre-qualifications and credit applications, dealer inventory, and pre- and post-sale inspection processes. Drivers Exchange is a transactional model with revenues gleaned from each sale of the platform. Peripheral offerings such as finance and insurance offer opportunities for additional revenue for each sale on top of our transaction fees. Further, Drivers Exchange feeds credit applications to Drivers Financial, as John mentioned, to further strengthen the revenue opportunities within the Power Band group of companies. And with that being said, I'll turn it over to Bruce to go over Drivers Lane.
Great, thanks, Darren. So looking at the Drivers Lane business unit, this builds on the IntelliCar acquisition from a year ago. Let's look at, why Drivers Lane and what is Drivers Lane. It's an e-commerce solution for online transactions from dealer sites or listing sites. So it provides a complete end-to-end omni-channel solution for online auto sales using a unique e-commerce transaction solution that really transforms the customer purchase experience. The team at Drivers Lane developed the first iPad selling platform, IntelliCar, and our other product, My Garage, which is a personal web page that shows selected dealer vehicles, and as Kelly was mentioning, enables research on each of those vehicles. So it really bridges the online to in-store experience for consumers. So building on this technology and our proprietary assets library, Drivers Lane takes it a step further, enabling purchase transactions between customers and dealers. So it really is a complete shopping cart, as you see here. It provides a listing site for both new and used vehicles. As Darren mentioned, we also have this asset-light model, so we don't have to own the inventory, which reduces costs and reduces risk. We create this personal hub with My Garage for a lifetime relationship with the consumer, and that enables us to capture the lifetime value of a customer. And because we own the data, we own that relationship, and we can continue to monetize it and offer additional products over time. So it's different from other sites in a number of ways. A few of the key ones are that we're talking about actual transactable payments that are calculated real time, not just MSRP estimates that are really just lead generation. We provide this personal garage where consumers can save their vehicles of interest from a single dealer or across dealerships to research and compare, and then transact directly through our platform. And the listing site adds additional visibility for the dealer's inventory so they can expand their trading arena. And then those vehicles can also be transacted directly. So we really play on the dealer's inventory there. But importantly, Driver's Lane also integrates and feeds into Driver's Financial and Driver's Exchange, sending customers in deals. So together we capture a bigger share of wallet. Whether customers want to buy or sell or lease or finance, we've got the solution for them. And that's what Drivers is all about. That combination and that synergy really comes together. So within our business unit, we're currently delivering about $500,000 a year in revenue and already demonstrating this cross-selling capability with dealers by getting a combination of our Driver's Lane products like My Garage together with Driver's Financial. As noted in a recent press release, we've gotten signed agreements from 29 dealers over the last couple of months that alone should deliver over $30,000 in monthly recurring revenue. And remember, that's before the shopping cart component, which is being released in Q1. So this speaks to the real value of a revenue model. With the SaaS revenue, we have a monthly dealer recurring license fee, generally between $9.95 and $19.95 a month, and that generates gross margins of 65%. So long term, we see very bright future for this, with potential revenue growing to $50 to $100 million, and that would be achievable with only 3,000 to 4,000 dealerships on the platform. So with that, let me hand it over to you, Shabu.
All right, thanks, Bruce. We'll now look at the actual results we have reported in the last 5 quarters. We are very pleased with our performance in the past 15 months, and we are optimistic of the future. Drivers Financial's lease origination came online in July of 2020, and since then, revenue has increased from $500,000 in Q3 of 2020 to over $9 million in Q3 of 2021. As you can see from the chart on the slide, there's a steady and significant growth. This is in spite of the many challenges we faced during the year. We started at $500,000 in Q3 and increased by nearly 3 times to $1.4 million in Q4, and then doubled in Q1 of 2021 to $2.8 million. And we are now reporting at over $9 million in Q3 of 2021. Our revenues have hit the bottom as a result of inventory shortages in the month of September and October. And we think that the things are going to get better, and we're going to see a steady increase going forward. So on this slide, we see the outlook for the year 2022. We'll be bringing the Drivers Exchange and Drivers Lane to the market in the first quarter, which will add more value and improve the user experience when they see the full stack of products. We believe that the inventory levels will get better, and the dealer adoption rate will also increase. As I mentioned, that we actually don't own the inventory. We are a marketplace, so that allows us to accelerate very quickly. So we are forecasting consolidated revenues to be in the range of $70 to $90 million. And of that, 80 to 90% will come from Drivers Financial, and the remaining from Drivers Exchange and Drivers Lane. Lease origination will be in the range of $7,000 to $9,000. And EBITDA before stock-based compensation will be in the range of 20 to 25%. So in conclusion, I want to say that we had a very good year 2021. That is the first full year that since we launched the finance portal, and we are optimistic of the future. With that, I'll hand it back to Gary.
Great, thanks, Shabu. Maybe just to start off, and thanks for the detailed presentation here. Perhaps kind of like a high level question first for me, just in terms of the macro backdrop, chip shortages and inventory issues. I think both Kelly and John kind of touched on it in your prepared remarks. What are your expectations in terms of that environment returning to a more steady state? And can you provide some context with what you're seeing in October or November so far, and how does kind of Q4 look at this point?
I'll go ahead and take that one. Yeah, we have seen, we feel like the impact, the bulk of the brunt of the impact is softening. So we kind of trended off to our lowest point of originations at the late part of October. Early November was a little bit of a struggle, but it's picked up since then. One thing that's remained consistent is application count, and that means that the demand for the product is there. Just the supply is not, and it's becoming a hyper competitive environment. And a lot of the vehicles that we see on our applications maybe don't qualify, or something we typically don't do. But what we have seen in the later half of November, and especially over the holiday weekend, is an uptick in originations and applications. So we believe that the inventory is behind us. All the manufacturers have stated they've chipped their vehicles and they're going to be shipping the vehicles. They should be hitting the lots in Q1. The 22s are probably going to be a little bit delayed just because they want to get 21s onto the ground and have a chance to assign rebates. There's no real understanding of what the consumer demand is going to be in the Q1. Consumers are always kind of reluctant, and they look at it as a late model car in the next model year as something that should be heavily discounted. So I think manufacturers are waiting to see what type of rebates they're going to assign to them before they ship them out in Q1. But we believe, and as with everyone else in the industry, that the worst is behind us, and the 22, the first quarter, things should start to normalize. What is lagging, the lagging impact of this is pricing. So pricing will normalize once the rebates and incentives have been established, and we expect for that to happen sometime in mid-February. That's typically when the 30 days before the cars hit the lots, you'll start to see manufacturers position themselves in the marketplace with incentives and rebates. So we think that the worst is behind us.
Great. And then, John, while I still have you here, so maybe you can walk us through your numbers in the press release. 7,000 to 9,000 originations outlook for 2022. Obviously, you've had great success onboarding enterprise accounts, and I think that's where a lot of growth is coming from as well. Maybe provide a bit more color in terms of sales mix. You talked about higher price, lower price vehicles, kind of where that's trending, and then also EVs versus non-EV vehicles. How does that mix play out in 22?
Yeah, thanks. So what really is going to drive originations in 2022 is we transition to a full spectrum lender, right? So currently we're the dominant player in used car financing from a lease perspective. We expect to become more competitive when we reach out into retail. We're not a down market product. We're not a full spectrum lender as of yet, but we will be in Q1. We have the technology integration necessary to expand out into retail lines, and the fact that we already have a captive audience of over 1,000 dealers is going to provide a low barrier to entry for us to be able to do that. When you expand out into retail lines, you're actually going to take the full capability of our system and release it upon the marketplace. Our proprietary system, our LOS, and why we're so unique and differentiated is we're one of the only operators out there or originators out there that can provide both a retail installment contract type loan callback and a used car or new car leasing contract callback. That's a very unique offering that hasn't been released to consumers and or the dealer body yet, and that comes on in Q1 of 2022. So the 7,000 origination number that you see, while it's substantial growth, it's very attainable, because we're expanding into retail, as I said. We're going to have a larger commercial presence, and with the addition of Driver's Lane and Driver's Exchange, as I've always said in all of my interviews in the past, we're starting to get more systemic into the dealership's organization and into their offering. By bringing in these other two solutions, we expand this marketplace. We're already the most profitable portion the dealership's F&I, if you will. We're more profitable than most lenders out there. We rev share more. We have greater participation. Our allowances, everything else is in line. All we need to do is scale originations. So as we bring these other two units in, that scales originations because you're dealing with consumers higher up in the funnel, and you're going to have more opportunities to secure originations that way. Second part is retail comes online. Third part, commercial. And overall, as you mentioned, with these larger enterprise accounts, many of them who are publicly traded, the implementation process is far more intensive. So we in the past have been one of the dominant used car and our independent dealers, our smaller dealer organizations. We've been very successful in onboarding and implementing our solution with them. Now that when you move up into organizations of 100 plus retail points, you move into a far more sophisticated retailer, which requires deeper integrations, not only into the sales process, but into the entire ecosystem of technology. So supply chain, inventory control, floor plan, back office operations. Our system is perfectly integrated into both. It just takes time because you're no longer training just one F&I individual on how to optimize a loan and make max profitability for the dealership. You're really kind of shifting the whole mindset of an organization into a new nascent product and how to deliver that. So there's training, there's adoption, and there's integration involved. We're well on the path for all the enterprise level accounts that we have. Dealer agreements are signed. We expect them to go live. But again, at Q1 of next year, some of them are starting to send over applications. It's a long process to get them to where they're into origination state. It takes 2 or 3 months, but then when you couple in the fact that regardless of big or small, a dealer is a dealer and he doesn't have access to inventory at the moment. So we're going to really see scale from those larger enterprise accounts as we move into the later part of this year, first quarter, when inventory returns, processes are ironed out, we're systemic into their operation, and we start to drive originations, not just applications. If you go back to where we were Q1 of this year, Q2 of this year, those first dealers that we brought on, we envisioned that we would receive 1 to 3 originations from these initial dealers. Those same dealers today are generating between anywhere from 5 to 10 originations, with some in double digits. We always have said if we can get to 3% or even 2% of the market share for used car financing, that would be a significant accomplishment for us. Well, we're there on the dealers that are originating now. Imagine if we extrapolate that out and we get these enterprise level accounts that sell hundreds of thousands of cars in an annualized year, if we can get 3% of that market share, and that's our objective. So that drives the origination number that we put in the forecast.
Perfect. Makes a lot of sense. I guess that's a great segue into Driver's Lane and Driver's Exchange. These are 2 new verticals that's expected to launch in the new year. Maybe start with Bruce. Can you give us an overview? You talked a little bit about it in your prepared remarks, kind of how your platform works on a standalone basis, and overall how it fits into the ecosystem. And you mentioned that the SaaS recurring revenue model. Maybe talk about the expectations within the fiscal 22 guidance here. You signed on the 29 dealers that you mentioned, and then how does that look when you look out to 22 and 23 in terms of kind of building that out?
Sure. Driver's Lane provides both a standalone capability as well as part of the whole ecosystem that we're building. As I mentioned, dealers will be able to transact virtually with customers through this e-commerce shopping cart directly on their inventory. So that's a standalone transaction that we're able to provide that very powerful and transparent software for the dealers. But also part of it is having a listing site where we're feeding new customers into that dealership arena. So when customers are looking to transact, as John was talking about, the power of the finance platform, we're able to make use of that on those transactions for the dealer inventory. So we're able to both get the SaaS revenue directly from our licensing fees with the dealerships, as well as enable more loan and lease originations through Drivers Financial. And there are similar synergies with Drivers Exchange. For example, if a customer is interested in buying a vehicle, but they also want to sell their vehicle, they can sell it directly through the Drivers Exchange platform. So that's a great example of how you get these synergies going together. And we're already starting to see that. You know, our existing dealers have generated 20 to 30 originations in the Drivers Financial platform so far. So, you know, this is how it's going to continue to build. And the value of that SaaS revenue, as I was mentioning before, by getting dealers signed onto the platform and getting the recurring revenue month after month, not only builds an ongoing and stable sense of revenue, but we get these cross-selling capabilities. For example, if you look at the over 1,000 dealers that Drivers Financial is already working with, in addition to our own sales force and attacking new dealership opportunities, we have the opportunity to build on and add Drivers Lane onto those dealerships who already have a relationship through Drivers Financial. So you continue to see those synergies happening.
And then in terms of feedback from the dealers that signed on so far, what has those, you know, any feedback from them? And also the 29, talk about the potential pipeline that, you know, your sales force is talking to. Like, how does that pipeline look?
Yeah, so the feedback so far, let me answer that two ways, Gary. The feedback in terms of the products that they're using is great because it's helping them sell more deals and make more money with it. I mentioned the originations that are coming on the Drivers Financial part of it. It brings the recurring revenue to us currently, and that's going to be where we'll build the pipeline through 2022. You know, so that will be at a target of 300 some dealers with that recurring revenue ongoing. But let me also mention the second part in terms of feedback. So dealers who we have shown the new piece of the Drivers Lane platform, the transaction-based shopping cart, have been super impressed with it. And every dealer we've exposed it to so far had been hand raisers and signed up to become pilot dealers, so that when we launch starting in January with these pilot dealers, they're already excited about the enhanced capabilities that this brings to the platform. So the feedback has been really strong with that.
That's amazing to hear. And then similarly for the Drivers Exchange platform, Darren, can you provide a bit more color in terms of, you know, the standalone as well as how it kind of incorporates into the whole power band or drivers strategy as a whole, and provide some guideposts in terms of transactions that you think will go through the system in 22 and maybe, you know, the longer term, how that might shake out?
Sure, Gary, appreciate it. Yeah, as I stated before, Drivers Exchange is a transactional model. As deals come through, we'll be able to funnel those deals coming in through Drivers Lane and through Drivers Financial. We plan on launching Q1 in Dallas. It's a perfect fit for us with having Drivers Financial right there in our backyard. We're targeting 400 transactions in the Dallas market, and then we will expand to each and every major market as we grow and as we progress through the different markets. What makes it great having a complete ecosystem with the Drivers platform is all of our deals we're going to send through Drivers Financial. So that will hopefully, I tell John on a consistent basis that we're going to be his largest dealer that he's got there with Drivers Financial after it's all said and done. But I'm not sure he believes me. But anyway, that's our game plan, and that's how we stand together with the other verticals that we have. Is Drivers Lane is going to be very good at funneling in those customers that they have in their rooftops. We can also pull in the inventory from Drivers Financial and be able to get consumers directly involved with doing their own car deals in a complete safe environment where they don't have to necessarily see somebody on a personal level, where our concierge service will actually pick up and deliver their vehicles. So there is no real face-to-face interaction between the two parties, and we can handle the complete deal online.
Makes sense. And then just last question for me before I open up to the audience. So far we focus on the growth side, top line and kind of launch of the new products. These obviously come with added costs to build these platforms out. Maybe a question for you, Shabu, and others on the line. SG&A, obviously there's ad spend and obviously other CapEx costs. How does that look in 22? And I guess I get this a lot from investors. When you project out your cash flow needs, how does the funding needs look like, and what are the sources of financing available to achieve your growth plans? I think you mentioned non-dilutive sources in your press release as well. If you can elaborate on that.
Yeah, Gary, good question. So we would like to keep the advertising cost as low as possible. This is by capitalizing on the existing relationship that we had with the dealer base and the dealer interaction with the consumers. So we can target both the dealers and the consumers. We'll also be participating in the premier automotive retail events like the NADA show, for example, and take advantage of all the, spreading the message by word of mouth. In terms of the CapEx that you mentioned, we are planning to spend around $4 million, and most of this CapEx is going to be in the first quarter, and after that the CapEx is going to diminish or going to be very less going forward from the next quarter onwards. And in terms of funding for these CapEx, we are kind of looking for debt financing, like a line of credit or a term loan. And for the cash flow needs, basically, we, as you've seen from our Q3 reporting, we have enough cash right now to take care of the operating expenses, and most of our cash burns is coming out of the CapEx project development cost, which will be taken care of as soon as we have some funding in place.
Okay. Great. I still have a bunch of questions, but I do want to open it up to the audience that we have here. So should you have a question, please use the raise your hand function. You should see that on the top right of your screen. I think there's a smiley face with the hand and there, and I'll get to your questions one by one. So if you have questions, please raise your hand. Right, we have one from Maddie. Please go ahead. You have to unmute yourself. Sorry, I think you're still on mute.
Okay, here we are. So Adi from Silver Family Office. First of all, glad to hear of all this amazing progress. A couple of questions, actually. Can you, first of all, elaborate a little bit about driver exchange? I understand it's some kind of a take rate arrangement, the revenue model. Can you give more information about how much are you going to charge? How is it going to work exactly?
Darren, I think you're still on mute.
Yeah, sorry about that. Yeah, our transaction fee is going to be a base fee of $350 per transaction, and that doesn't go up or down based on the price of the vehicle. It's a set fee per transaction.
Okay, perfect. And with regard to driver exchange and lane, maybe more towards exchange, how are you going to handle customer acquisition? What are the go-to-market strategies you're looking at?
We're going to do a lot of SEO type customer gathering. We're bringing in a large inventory feed from Drivers Financial and Drivers Lane, which will cut down our acquisition costs quite a bit. So that's our plan going forward in the short term for our Dallas market.
Okay, thank you. And maybe last question before I fall into line again. Looking at the guidance, it seems very, very conservative from my eyes, at least. I just wanted to know, I mean, you're looking at 1,200 dealers on the platform today. There'll be likely more. And working out the origination, says it's about half an origination per dealer per month. It seems a bit low. Is this number what is happening today? Is it lower than what's happening today, or is it higher?
If you extrapolate, you have to look at it this way, Adi. Each dealer is in a different process of onboarding, right? So there is a delay. So it's hard to take 1,000 and back into the originations. If you were to say that's half an origination per dealer, we're probably running a little bit more than half of the dealers that are currently active. And I don't mean that are on the platform. I mean that are submitting applications and give us a chance to do an origination. So that number can be, I don't want to say misleading, but it's definitely 1,000 dealers is foreshadow, and we have almost 500 that are doing originations currently. The other 500 are in a state of onboarding or in a state of transition. Remember, in automotive, as we said, we started off with these smaller independents and smaller organizations. There's a lot of churn in those organizations. So there's a lot of retraining and reintroduction of the product. As we transition to these larger macro accounts, the churn drops dramatically. The training is more systemic, and it's far more process oriented. And when you go into a larger organization, as I've always said, they're far more sophisticated from a finance standpoint. They typically have a CFO or a minimum finance manager. He dictates deal flow, mix of originations, et cetera. As those accounts come online, you're going to see that 1 to 2 originations per store fall in line with the total dealer count. That's how we get to the 7,000 originations, with the blend of commercial that we also will be releasing in 2022 from Driver's Fleet. Those two combined get us to those 7,000 originations. We don't need to go from 1,000 to 2,000 dealers to get to 7,000 originations. It will only accelerate the pace. But again, dealers are always going to be in a certain part of adoption. If we bring on 1,000 dealers in Q1 of 2022, you would expect to get 100 to 200 originations from those guys in the second quarter of the fall, of the second subsequent quarter. It just takes time to get integrated and launched.
Thank you.
Great. I see no other hands up, but feel free to press that button if you any other questions that comes up. I guess. Oh, Matt, there is a couple. Matt, you want to go ahead there?
Yeah, hey Kelly, hey John, Matt Newduck from the Desjardins sales desk. Thanks for taking the time to present, and congrats on all the progress you guys have been making. Just a question here. You guys are currently listed on the venture, obviously. As you grow into your guidance, have you thought about or kind of going through the process of a potential NASDAQ uplisting? Obviously, this would help open up the investor base to a wider audience. Is there a timeline you can provide us with, or maybe any milestones you're looking to achieve prior to that? Thanks.
Yeah, I think ultimately our intentions are to go to NASDAQ. I think what we're trying to do before we kind of took on that venture was to get the other two verticals up and running properly. So in the new year, I think we're going to probably push forward a little bit more aggressively. But we felt getting Driver's Lane and Driver's Exchange up and running with Driver's Finance was the right way to start. So yeah, that is our ultimate goal. And we look forward to something in 2022 on that front.
That's great. Thanks.
You're welcome.
Right, we have another question from Shahir. Please go ahead.
Yeah, hi guys. Just to want to make sure you are not taking any credit risk. What happens if, let's say interest rates goes by 2%? Is there any credit risk you're taking, or some kind of duration, or variable interest versus fixed rate risk you're taking?
Referring to the portfolio that we have of originations is in that regards, are you talking about line of credits or debt that we currently have?
No, portfolio for originations.
No, we have no balance sheet exposure on our originations. We're a flow model. We basically originate and service that portfolio until it's collateralized and sold off by our lending partners. So regardless of rate, all of our unit economics remain the same. So if rates do tick up, quarter point, a point, whatever they might be in 2022, all the unit economics just transition. So we don't have any impact from rising rates. What impact from rising rates will be is on a monthly payment would actually make our product that much more competitive. We excel at a comparison of lease to retail. So if interest rate rises, that means retail contracts and the monthly payment will rise, making us even more competitive than we were previous inflationary pricing. So in an indirect way, while rising rates hurt the industry as a whole, it would actually benefit our used car leasing origination model. I hope that answered your question.
Yep, thanks.
Okay, great. Next question's from Ben. Please go ahead.
Hi guys, nice to finally see and meet you. Maybe a question about the next level here with the two other, let's say, products or divisions coming in. What would you say would be your investments, your OPEX and your CAPEX for the next few months? And are you cash liquid enough for that next 12 or 24 months?
Shibu, do you want to take the CAPEX, OPEX, cash flow portion, and I'll handle the rest?
Yeah, I'll do that. So as I mentioned before, in Q3 we reported nearly $9 million in cash. So we have enough cash right now to take care of the operating expenses. And for the development projects, we have a couple of options right now. We're looking at some debt financing, line of credit. So that will take care of the CAPEX projects. And most of our CAPEX expenses are going to be for the first quarter. After that, the expenses are going to be basically the operating expenses, which will be covered by the revenues that we generate.
And as far as business development costs, they're going to be nominal. When we started off our plan 12 months ago, as Bruce was developing Driver's Lane and Darren was finishing Driver's Exchange, Driver's Financial really came in and established our consumer base, which is essentially the dealer still at this point. So with over 1,000 dealers, you have a captive audience, right? So we're a very profitable product for the dealer. We're not a contentious relationship. We're systemic to what they're trying to accomplish. And we're one of their, as I said, again, their most profitable solutions in the F&I department. Of that value chain, we still allow them to participate and maximize, right? So now that we introduced ourselves there, we come back and say, hey, we're a full spectrum retail lender giving you the opportunity to monetize this value chain. Oh, and by the way, we have additional products that can scale the same experience, right? So we can take your point of sale profit that you're experiencing here in the store and push that out into multi-sided marketplaces. We have one of our own, and there's several others that Driver's Lane can connect you to. So as a consumer acquisition standpoint, we're going to have little to no business development cost. That's the great thing about already having a built-in audience that's captive and receptive of 1,000. And as that grows exponentially, so will the adoption of our Driver's Lane and Driver's Exchange products. In addition to that, Driver's Lane already has a significant install base, right? So we're looking to not only cross-channel sell Driver's Lane into Driver's Financial, but for the first time, take Driver's Financial out to Driver's Lane and Driver's Exchange consumers, which are dealers, and essentially have that full stack integration with them as well. So there's a lot of synergies. Cross-channel channel selling is going to occur, and it's not going to be a big burden on the balance sheet. We're not starting a company from zero. We're starting a company that's already established, and we're expanding that customer relationship and becoming more integrated into the vertical of what they're trying to do and engage with consumers.
Great. That's really good to hear. Thank you very much, guys.
If there's any other questions, please raise your hand. If not, I have a couple more. John, we didn't really touch on the gross profit margin. Sounds like from your press release, you're maintaining that 50 to 60% target. But with the elevated prices and looking out to 22, are you needing to jack up your dealer participation rate? And does that impact your margin outlook at all?
I don't believe it does, Gary. These inflationary prices are, in the world of automotive, they're a micro event, right? We haven't even seen residuals adjust yet. So we were probably closer to that 60% number at the first half of the year. It's probably closer to the 50% number now because we have increased participation to try to combat these inflationary prices. But given the fact that residuals haven't changed, we know that this is going to be a micro event for us. So as we sit back and we model this, we haven't altered our 22 forecast. I sit down with our president and CFO, on a weekly basis, and we talk about this. These numbers are finite for us. So we know that we're going to remain in this band. I think somebody asked just a few minutes ago about rising interest rates. Not going to impact us. Unit economics remain the same. The only way we don't benefit is if inflationary prices stay, which they will not, or if interest rates fall back to zero, or new cars are so heavily incentivized that used inventory no longer matches the residual value. Again, that would be a macro event, something like cash for clunkers. We don't see that happening. So yes, we'll continue to get that 50 to 60% margin. We'll probably see it creep back up closer to 60 as 2022 rolls out, and maintaining all the same unit economics. So we still are looking to make around 7,000 to 7,500 per unit at 50 to 60% margin.
Okay, got it. Makes sense. And then I actually have a follow-up for Darren. Just in terms of building out the exchange platform, a lot of your peers, there's heavy capex related to reconditioning centers and whatnot. Is that something that you would look at when you trade in a car or auctioning a car to kind of make it better, or how does that look when you build it into your strategy?
Good question, Gary. We have completed a complete application where a consumer can go out and do a complete walk around on their vehicle to download into the system. So we've also integrated a process that once the vehicle is sold, they can also do through one of our concierge services, do a complete walk around on the vehicle to verify that the vehicle is as the customer stated. Once we get the vehicle in our actual hands before we ship it out to the purchaser, we're going to look the vehicle over and then advise the consumer that purchased it or dealer that purchased the vehicle of any known issues and go from there.
And then in terms of, I guess, the buyer of that vehicle, then I guess there's a window where they can return it if they're not satisfied, or how does that work?
We're going to give them a 7-day unconditional guarantee on the vehicle.
And the risk would be going back to the seller if they don't, if they're not satisfied, or do you?
No, at that point, the vehicle becomes ours, and we'll simply relist it on Drivers Exchange and resell the vehicle. If there is a known problem, we'll go ahead and fix that vehicle. Or if there's no known issue, then we'll just simply relist it and resell it on Drivers Exchange.
Okay, makes sense. We are towards the end of the fireside chat here. Just wanted to reach out to the audience. Any other questions from our audience? Nope, doesn't appear to be. So with that, Kelly, I want to pass it back to you for any closing remarks.
Thank you, Gary. Yeah, I just wanted to reiterate what everybody spoke about. It's been a long journey, a lot of hard work by the team for each division. I think 2022 outlook looks excellent. I think someone brought up about our forecasts and the conservative nature. We're trying to be realistic. Of course, we feel the opportunity is unprecedented, especially what's going on in the industry, and we've got the necessary tools to take advantage of opportunity, and especially in regard to the consumer. I think the consumer is going to dictate how we go forward, and we've tried to build platforms to accommodate them and the dealer. And as I mentioned at the beginning, you know, unlike a lot of these other companies, the dealer is not our enemy. The dealer is our friend. I'm a dealer. I think what we're trying to do is just facilitate transactions in a transparent, simple way so that the consumer can acquire a vehicle simply and the dealer can accommodate the needs of the individual consumer. So we look at 2022 as going to be a breakout year, and really excited about it, actually.
That's great. And this concludes our fireside chat. And if any participants have any follow-up questions, feel free to reach out to myself or Justin, and we'll for sure, you know, pass it on to the participants here to get your questions answered. Thanks, and yeah, enjoy the rest of your day. Thanks, everyone.
Thanks, Gary.
Thank you very much, guys.